Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in live from. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. And on today's hot sheet, boy, do we have big breaking news. I will cover the talks about Murdoch selling Move Inc., a new consumer portal designed by MLSs, Goldman Sachs home price predictions, which have been altered, and a hiring surge by small businesses. Today is Wednesday, January 25th, 2023. And folks, the hot sheet starts now. Why we do it. This is why we do the hot sheet. We're in week 3 of this ambitious undertaking, doing the hot sheet live every single day, Monday through Friday, that the markets are open at 9:30 a.m. Eastern time. The best way you can support it is hit the thumbs up, please. As soon as you see this video, share it with one person who wants to know about all the information they need on housing in the last 24 hours and the real estate industry. And today we've got big news. This is why we do this. This is why we decided to start the hot sheet. Last night, Reuters reported that Rupert Murdoch is thinking about selling Move Inc. Move Inc., of course, is the parent company to Realtor.com. And on the Real Deal today, Murdoch in talks to sell Move Inc. to none other than CoStar. CoStar is the commercial giant. A $3 billion deal for Realtor.com parent would further entrench CoStar giant in the resi space, the commercial real estate giant that is CoStar. I just said previously, and maybe you caught this on previous hot sheet, that if CoStar goes out and buys Redfin, watch out. I said that because Redfin's in a vulnerable position. Their stock's gone down since peak over 80%. It was at 90% at one point. Their market cap, less than $500 million or about $500 million, is an attainable market cap for other companies to come in and purchase. I didn't believe Realtor.com was on the table, but here it is. CoStar could be buying Realtor.com, and that would be the most significant acquisition. I can't even fathom an acquisition in 2023 that would topple that in the real estate industry. I mean, this makes that Boomtown getting acquired by Inside Real Estate, KV Core, that was announced as one of the biggest acquisitions in recent memories, because it makes it look small. It makes it look really small in comparison if this happens. Still a big acquisition, but this is enormous. And I don't want to undersell it. I can't overstate it enough how big of a deal this would be. Let's get into the details. Is it time for Rupert Murdoch to move on? Murdoch's News Corp is in talks to sell Move Inc., the parent company of listings giant Realtor.com, to CoStar Group. Reuters reported just last night. CoStar, of course, CoStar's been playing footsies with the real estate industry. They bought apartments.com. They bought HomeSnap. They bought a few others. Some of these smaller portals, successful portals, but smaller portals. They've been just dipping the toe. This would be a cannonball into the resi space if CoStar buys Realtor.com. The publication did not have any financial details about the potential deal. News Corp shelled out nearly $1 billion in 2014 to acquire Move. You might remember Rupert Murdoch's famous quote at the time, "What the hell does Zillow mean?" Basically starting a head-on collision course with Zillow. Murdoch told a gathering of real estate agents soon after that acquisition. We know what Realtor means. A deal with CoStar would value Move at about $3 billion. People familiar with the matter told Bloomberg. So Reuters reported it. Bloomberg got some quotes. This again is on Real Deal. I will put all of our sources, all of our slides from today's show, as we always do, in the daily download link below. So if you want to grab this stuff in one condensed place, make sure you sign up for that. News Corp owns an 80% stake in Move, with the rest being controlled by REA, a digital real estate subsidiary also controlled by News Corp. Now, listen, News Corp also a big company, right? News Corp. I'll get into exactly how big CoStar is when you compare it to a company like News Corp or Zillow. Stay with me for that. I'm going to uncover that in just a second. All right. Move's revenues were $227 million, according to an investor presentation by Insider. Revenues hit $700 million in the 22 fiscal year. CoStar, led by Andy Florance. This dude doesn't mess around. If you followed Andy Florence's career at all, this dude does not mess around. True top G as it comes down to the real estate space. Now going to become a major player in residential real estate data, as he has over the last decade, buying apartments.com, also for rent.com, HomeSnap, I believe homes.com, which isn't on the list. Now, the FTC stopped a deal to buy RentPath. Does the FTC have a problem with this potential realtor.com move? Let me know in your thoughts in the comments. CoStar buying the behemoth of realtor.com. Should the FTC look at that? Do you think that is a monopoly? Let me know what you think in the comments below. This changes when we're talking about, we've got a big housing update here in just a little bit, but when we're talking about the residential real estate space, it's hard to find bigger news than this. The reason is because how much money CoStar has. Because how CoStar has more leverage, more assets, more firepower than any other company in the residential real estate space currently. Okay, why do I say that? Zillow. Okay, Zillow's market cap, $10.1 billion. Big deal, right? We know Redfin is less than $500 million. That's why I said, hey, somebody goes out and buys Redfin. I still think that probably happens. That's going to be substantial because consumers like that and so on, right? But it's also obtainable, a $500 million deal. Well, what's CoStar worth in comparison to Zillow's $10 billion market cap? CoStar is at $32 billion market cap. 32 billion. CoStar is 3x the size of a Zillow, 3x the firepower, 3x the ability to go out and make major acquisitions like the one they're looking at right now in realtor.com. News Corp, we said, owns 80% of realtor.com. You've probably heard of News Corp. News Corp is a really big company. Now, just to be clear, News Corp, a lot of people get confused. They think News Corp owns Fox News, Fox Corporation owned and controlled by Rupert Murdoch, controlled by Rupert Murdoch, is not owned by News Corp. So I do want to make that clear. Some people do get that confused. But News Corp, how big are they? They're big, but they're just about the same size as Zillow. You can see here the 11.32 billion cap. CoStar's market cap swallows Zillow and News Corp's market cap combined. So the acquisition of Move/Realtor.com is 10% or less than 10% of CoStar's entire market cap. They can make this acquisition with ease. And if they do it, watch out, because now CoStar is the biggest player in residential real estate. And yes, I mean bigger than Zillow if this happens. It makes yesterday's news by a few MLSs look entirely small, very little. Move over, Zillow. MLSs combine forces to launch Nestfully. We've got it on nowbam.com. I'll have it below in the source link as well. But here we go. California Regional MLS, RE Colorado, and Bright MLS, some of the biggest of the hundreds of MLSs in the country, have combined forces to create Nestfully, which is set to launch in Q1 2023. The portal, designed and run by the residential real estate industry, is designed to offer pristine listing data for consumers and will provide leads to brokerages for free. We've heard a lot of rumors about the MLSs coming into the Zillow space. We can serve the consumers better because we have the best data inside of our MLSs. While that may be true, these rumors have been going on for years. And all that's happened over the years is Zillow has picked up more market share. Zillow, as I've said many times, has become the true Google of real estate to the consumers. If they're going to look up a property, they're going to Zillow it. Just as if we were going to search something, we are going to Google it. Maybe soon we'll be chat GPTing it by human nature, but right now it's still Googling it. And as it relates to home purchases, it is Zillowing it. They've lost a lot of time. They had everything they had it all in their hands for many years by controlling these MLSs. What are they actually going to do here with Nestfully, set to launch here in Q1? Okay, they're going to focus on the consumer. That's what Zillow does. Great. On January 24th, California Regional MLS, RE Colorado, and Bright MLS made the announcement official for their new consumer portal, Nestfully. Among the three initial participants, there are 240,000 agent and brokerage subscribers whose annual sales topped $280 billion in 2022. These are the members of these MLSs. They're going to launch it this quarter. They're going to provide the same information that agents and brokers use daily. The differentiated search experience is meant to coincide how buyers search for properties. Art Carter, CEO of CR MLS, the consumer-first orientation was at the top of our list when we designed Nestfully. Nestfully is a world-class and feature-rich. We cannot wait to show it to consumers and brokerages alike. What they're talking about there is that these MLSs have some unique fields that Zillow probably doesn't offer. I would say that Zillow covers 80 to 90%. Zillow would know better than I would, but just a feel for what's being offered in different MLSs and what's being offered on Zillow for fields, for home features, they're covering about 80 to 90% of these home features. But as every local market, as we know, is a little bit different, and there are different fields in these MLSs. If you're an MLS subscriber, let me know in the comments, what are some of the fields that are different in your personal MLS that you'll never find on Zillow? So what Nestfully is saying is all those features, 100% of what agents or MLS subscribers can see is going to be made public. So the question is that a niche market that's going to actually find that of value, those other 10 to 15% fields that Zillow doesn't have? Or is this something that's going to be an explosive, scalable product for consumers to use? That obviously remains to be seen. Users will be able to use these filters to create searches based on individual, unique needs. I mean, you can do that on Realtor.com, which we just talked about at length. You can do that on Zillow, but you're going to be able to do this now with more fields. That's what it sounds like to me. You're going to be able to schedule a showing. Okay, well, Zillow owns the best showing time application, which is called Showing Time, right? They're going to be able to directly ask the listing agents question about homes that interest them. Okay, good. Got it. They're going to have the freshest information at their fingertips, optimized for mobile viewing. I mean, these just sound like words. I'm sorry. Brian Donnellan, President CEO of Bright MLS. Consumers will get the freshest information at their fingertips, optimized for mobile viewing, so they'll be able to make educated decisions about the homes they're considering quickly and efficiently. These are just words. They mean nothing because consumers already have very, very fresh information at their fingertips. They've got these at their fingertips. They're optimized for mobile viewing to make those educated decisions. Okay, so I'm hopeful, and I'm hopeful for this product for the industry, for sure. I don't want to sound a Debbie Downer here on this hump day, but I don't know. I'm not hearing anything too different that's going to be designed and run by the residential real estate industry. Great. Consumers want what works for them. They're not going to be prideful about that. Okay, so smoother real estate experience. They're not telling us how. What is probably most interesting to agents, and if this is interesting to you, let me know in the comments. Perhaps most notably for agents and brokers, leads will be provided to brokers at no cost, saving them millions on annual referral fees while delivering a more seamless real estate experience for the consumer. Yeah, I think all agents would like to see, some some significant competition to reduce referral fees. If this is going to be the best, if Nestfully is going to be the best app of all time, then it's going to be difficult to actually develop that with consumers, and it's going to be very costly to do that. So if you're going to also reduce referral fees, love to see it. I think I'd certainly be the biggest fan. Not sure if I love the name though. Let me know in the comments. What do you think of Nestfully? Hey, if you're talking to your spot, consumers talking to your spot, hey, I just sent you that Zillow link. I just sent you that realtor link, right? Like Rupert Murdoch says, we know what realtor means. I just sent you that link from Redfin. Easy to say. Hey, I just sent you that link from Nestfully. It's like once I get to the Nestfully, it's like a mouthful. I don't know. I probably wouldn't have gone there. It's certainly not as easy to say as BAM, but it is something that the MLSs are doing. Bad timing announcing that yesterday after that Realtor.com news hit. I don't know. Is that a coincidence that information was leaked last night after their announcement? I think so. I think it probably is. Okay. Goldman Sachs has reversed their outlook on U.S. home prices. They said, we covered this on the hot sheet just in the last couple of weeks. They said that the residential real estate industry, U.S. home prices, was set to go down 6.1% in 2023. They've revised that by 3.5%. They're now projecting that U.S. home prices will fall by 2.6% in 2023. So Goldman Sachs believes they were 3.5% off on the positive for homeowners. They don't believe U.S. home prices are going to fall as much as they initially said. Their total drop in home prices, they said, is going to be 10%. They believe we've already lost 4%. This is according to, again, Goldman Sachs and their Case-Shiller home price index. This table that you see here is available in the daily download below. What I also think is interesting, here's the 2.6 that they believe now U.S. home prices are going to fall in 2023. They had us dropping in 2024, but not now. They have U.S. home prices going up almost a full percent in 2024. So as things shift, as the volatility in the market continues to change dynamics, we see companies like Goldman Sachs changing their outlook. They get more data, they change their outlook. I'm not saying Goldman Sachs is right. I wasn't a buyer of a negative 10% overall drop in U.S. home values. But this is something that I want to pay attention to. I want to know about these trends, because if we had a line of projections that started to trend in one way or the other, we would take that into consideration. This is a story, if I'm an agent, that I'm telling people who who think they're going to get this big 10% drop. Hey, Goldman Sachs was the most bearish on U.S. home prices, saying just weeks ago that the U.S. home values are going to go down 10%. They've seen the trends that have happened since January 1st, and they revised it. And now they believe we're only going to drop 2.5% in 2023. And oh, by the way, in 2024 and 2025, they see U.S. home values going up a total of 3.5%, erasing this 2.5% drop this year. So if you're waiting for a cliff in 2023 so that you can scoop up a deal as a buyer, I just don't see that happening. Goldman Sachs was the most bearish. They don't see it happening either. Obviously, back that up with your local data. We dove into this deep on yesterday's 1-hour webinar with David Childers from Keeping Current Matters. This kind of information is on that webinar. Go into the live tab here on the YouTube channel. Make sure you're subscribed so you don't miss any of those live events as well. Here is the update. You can see that Goldman Sachs, and this chart will be down in the daily download below. You can see that they were at a negative 6.1%, and they have now completely revised that. This is where they were. So this is the past that we're looking at. If you want to show a comparable to somebody who's not as optimistic about home prices, hey, well, Goldman Sachs wasn't either, and they just changed course in a big, big way. Lance Lambert on Twitter at News Lance, love following Nance, says the ongoing home price correction won't be like ones of the past. Goldman Sachs now says the hardest punch came right out of the gate. The nominal price declines will slow from here and fizzle out later this year. So Goldman Sachs is seeing that, okay, quarter four of last year is where we saw the biggest punch. This chart again is available down in the daily downloads for home prices. We're going to see it in quarter one, but it's going to fizzle out here towards the end of the year. And in 2024, it's going to start going up. So they believe that the worst is behind us as it relates to U.S. home prices. Again, referring to that 1 hour live webinar I did yesterday with David Childers, Keeping Current Matters, he says the same thing. He says it about rates. The worst is behind us. The worst for U.S. home prices is behind us. Goldman Sachs believes that the rates had the biggest impact on home prices, and we're now going to start to flatten out, and even next year start going back up in home prices. Okay, last, I want to share with you what's going on in hiring, what's going on with the job market. This is something I'm watching very closely. This is something that I believe has a significant impact on U.S. housing and could alter a lot of these projections one way or another as we move further into 2023. Wall Street Journal reports today, surge in hiring by small business complicates Fed's effort to cool the economy. Talked about this a lot, where the Fed has said, hey, we need a housing reset. They reset housing last year. They've also said if we need to have a employment reset, obviously last case scenario, we'll do that. We're committed to 2% inflation. We're at 6.5%. If we need to basically put people on the streets, unfortunately, your friends, your family, people in your community, if we need to put people on the streets, the Fed says we will do just that. And it's small businesses that are complicating this effort. We talked about some of these major companies having significant layoffs, but small businesses are not laying off at the same scale. Since February 2020, small business companies with fewer than 250 employees have hired 3.67 million more people than have been laid off or who have quit. So that's a net number. Largest businesses with 250 or more have cut a net 800,000 jobs at this same time. So large companies are cutting back while small companies are continuing to grow. Job openings by size, under 250 employees. That's the blue line right here. Job openings by size of company, under 250 employees, is up close to 8 million job openings, while 250 employees or more, those companies are at about 2 million job openings. So small businesses are growing. I also think, when we talk about low employment, even if that number goes up, I think people are working different jobs from home. They're working for small companies, maybe as a vendor, doing social media, doing these different types of things. This is a trend I think that will continue. It's going to be interesting to see how the Fed reacts to, okay, we've got a pop in real estate, we've got good news, and we've got small businesses continuing to hire. What I like about the fact that it's small businesses continuing to hire, if you're outside of a major city in the US, this is probably good for your community. And if you're in suburban America or rural America, this is a positive. This means your community is probably doing well. And let me know in the comments if you're feeling that, if that's the case for you, if your community is doing well. Okay, later today, we've got a massive agent podcast, How to Be a Mother and a Top Producer at the Same Time. I always say being a mother is the hardest job in the world, so that's going to be very interesting. Also, if you missed that webinar with Keeping Current Matters, make sure you tune in to that. The replay is up under the live tab here on YouTube. Let's quickly just see where we are today on the 10-year and the 30-year. Right now, we are back under 3.5 on the 10-year yield. It's according to Wall Street Journal, 3.446. So we've seen a slight drop. I would expect the 30-year to drop today a little bit, probably get us back to that 6.15 range. We ended the day yesterday at 6.21, according to Mortgage News Daily. That is your hot sheet for today. Can't promise you we'll have as big a news tomorrow, but you just never know. Can't wait to see you back here tomorrow. Please share this with somebody who needs to know what's going on in housing and the real estate industry in a 24-hour look back. And I'll see you back here tomorrow live at 9:30.